The following content is for informational purposes only. The views and opinions expressed by the hosts and guests are solely their own and do not necessarily reflect the views of Alea, its affiliates, or any organizations represented by the participants. Nothing discussed should be construed as financial, legal, or investment advice.
Welcome to Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. I'm your host, Stefano, Director of Institutional Services at Alea, and with me I have Bernard Schmid, co-founder at Areta. Areta is a digital assets investment banking firm supporting crypto companies across M&A, capital markets, and on-chain services. They lead execution for mergers and acquisitions, from deal preparation and financial modeling to investor outreach and stakeholder management, alongside a range of services tailored for the digital asset space. Bernard, welcome on the show. Great to have you with us. How are you
Yeah,
doing?
thanks for having me, Stefano.
Yeah, definitely. It's fun. We had Carl on before, your co-founder, sometime last year, and that was a very insightful conversation, mostly on mergers and acquisitions in this space. I'm excited to talk with you this time around, get your perspective on how the landscape has been developing in the meantime. So, but before all that, let's start with you, Bernard Schmid. What were you doing before founding Areta?
First of all, thanks for having me. Very grateful to be on here. I heard you had a great discussion also with Carl, and very, been following what you guys been doing. So kudos to you, first of all, of bringing that type of content out there. I think it's much needed, especially now looking at the institutionalization of the space. So following a similar mission here with you guys. So that's been great to see. I'm part of the co-founding team at Areta, one of the three co-founders. Before Areta, basically come from investment banking originally as well. Then I spent most of my career at McKinsey, where basically I covered the commercial side of financial transactions. We're really in any tech vertical you can imagine, jump from one transaction to the other. And then ultimately, connected with Carl and JPU, the other two co-founders at Areta, coming from Blackstone, to start the mission to really, bring what we've learned at those institutional organizations to the crypto space, where ultimately we saw that there was a gap at the time when we, dove deeper into the space, got super excited, one about the tech, of course, but then also the level of talent that we've seen across the different verticals, paired with basically that gap that we observed in what we knew from the traditional world, and how processes are run, how big of a topic M&A is, how interfacing with investors or institutional parties typically goes, to a very young emerging space where there's a lot of potential, a lot of talent around. But that was clearly something that was missing. So that was for us the starting point 4 years back, where all of us then did the decision to quit our safe jobs back at the time and jump into fully to build that within the digital asset ecosystem.
Yeah, that must have been super exciting. Like you said, very agile space, very fast moving. You mentioned before that you were at McKinsey, among others. That time before starting the firm, how did that experience shape you? Like, what did you learn from that? What did you take from that? And how did that specifically made you decide to switch industries to the digital asset space?
Yeah, totally. I think, where I'm coming from was always excited about technology. Even before, starting university, there was kind of the go in of back then really involved in the startup scene, looking at founders and kind of these, magicians that are able to realize their ideas. So always was super excited about that. Personally, I've always been on the financial side. So economist also by background. and really also working in the tech space, always focused on understanding digital businesses or tech businesses from a financial perspective and the market lens, where really this was also the goal into my career, where I made the decision I want to learn as much as possible, be exposed to as many different situations as I can, where McKinsey back at the time basically provided that platform for me. So you're staffed on a new project in a new kind of category every 3 to 4 months or so, need to jump from one topic to another. So in that sense, kind of very fast pace and enables you to soak in as much as you can, and obviously at a young age, and hopefully still to some extent we're all minded in that way. How it shaped me, and I think that's similar to to what I also see in the team, where ultimately you can exchange a couple of logos. Everybody comes from these either TradFi organizations within our team, the JP Morgans, Blackstones, Goldmans of this world, or the kind of leading strategy consulting firms. The environment ultimately, and I've experienced that throughout all my life, and I'm sure you can share that observation, is what shapes your thinking, but also even like subconscious decisions, or how you approach challenges, deal with problems, and so on. And in that sense, I wanted to be exposed in an environment where it's fast paced. There's a lot of things to deal with, which was ultimately the decision to then go to McKinsey. And I think the values that I learned there, or that I picked up on, are still the values that also run Areta. It's kind of this, one ambition really to provide the best, or produce the best ultimate output, where at a firm like McKinsey, you're basically paid a big premium from the largest corporations of this world, always interface with kind of board level or C level, and the expectation bar is obviously extremely high, right? You're hired for a reason, so there's no question asked of slacking on some output, or not delivering to the most extent that you can. And that is paired then also with the culture that you see there, which is kind of fully driving things, 100% ownership on topics, very clear communication. And this is what I think took away, and I think still lives a bit in Areta. A thing that surprised me, and McKinsey also publicly sometimes gets a bit of mixed opinions, and polarizing at times, because it's kind of like a meritocratic environment to the most extent, right? Like there's this notion of up or out. If you don't perform, you get kicked. People don't care about you. It's a very kind of transactional environment, and so on. What I really experience on the ground, though, is more like a sports team environment, where there is a expectation of you like playing well, and then you get higher up in the team, and you get placed more in the right matches, and so on. But if you're struggling, and if you're willing to put in the work, and if you're honest and humble, and so on, then there's also ultimately support from all ends, because ultimately it's a team effort. You want to succeed together, which I always found to be a nice kind of analogy, also how we run Areta, really as a team. There's is a leader, a striker, and then there's a defender, and so on. So there's a lot of things to play around with that. And yeah, very thankful also for that experience, and how we then took it to now the digital asset space a couple years back.
That's a great analogy, the sport teams one. It's often okay if team members are struggling, but you do expect like 100% effort and input from everyone, and as long as that's met, then people can always lend a helping hand. So I like that analogy. All right, so let's talk a bit more about Areta and the current way of operating of you guys. So tell us a little bit more, and listeners to understand how an investment banking firm operates. How do you basically generate returns? What is the business model, basically?
Mhm. Yeah, totally. basically what we do, our business is really centered around transactions. We come into play when a founder or leadership team is considering a sale of their company or project. And this is really a kind of once in a lifetime situation, maybe twice in a lifetime situation if you're lucky as a founder, where it's, the highest important level of kind of importance that you can imagine, because ultimately, if you consider this, you want things to be done right and ultimately optimize for deal certainty, and then also deal outcome. How we operate as basically the advisor, typically to the sell side, which is basically the company that is being sold, is we come in ideally before any kind of process is being run. And that typically starts with either a founder gets inbound interest from an acquirer that, finds the asset interesting and can see a strategic upside of embedding it into their own umbrella. Or there's just a general interest from a founder in kind of testing the market or willingness to engage in M&A. So we come on board and then really start with a very diligent, I would say, assessment process of that asset. So we go in and really understand the asset in depth. Basically evaluate what is the market appetite right now for the asset. And there it's very important that we're kind of connected to, the right buy-side teams and understand where the appetite right now is for specific topics and verticals and so on. If we then start to engage with the sell side, we then basically run the whole process from preparing basically the material and sell side story, also drafting a teaser to really present the asset in the right way for people to grasp what is the potential strategic upside of an acquisition, developing a financial model, and then ultimately also leading the buyer outreach. So we then go out to parties that we deem are relevant buyer groups for that asset and open those channels, schedule management meetings. After that, there's obviously a multi-month due diligence process that those transactions go through up until final kind of terms negotiations between the buy side and sell side, where we see the most value add is obviously one, owning the full process and being able to approach parties and present the assets well, but then also really in the kind of final stages and the intricacies of negotiating the right terms. So how it's typically done, and the full process typically between kind of 3 to 6 months long. In the final stages, obviously as a founder, you're faced with, you now need to negotiate with a buyer what your company is worth and how the purchase price composition should look like. So how much of the purchase price is in cash versus earn-outs or equity. And if you think about it kind of and taking a step back, this is really a, interesting situation to be in as a founder. You're negotiating with your future employer, if you will, or your future new home on how much they now should pay for your business, where one, obviously, you have an incentive to be acquired because you want to get a deal done, but also you want to optimize for the outcome. If you then also look at who sits at the other side, these are typically, sophisticated corporate development teams who do that as a full-time job. So they see those situations daily and are very experienced in negotiations. Whereas the founder on the other end potentially engages in those types of situations for the first time in their life. And also, if you come from a very technical background, might be topics that you've never really thought about, right? And this is then the negotiation kind of setup. So there our value is obviously, quite apparent in coming in and being able to steer those conversations, coming in with the knowledge of having seen those negotiations unfold and being able to advise the sell side then on the deal structure and ultimately driving into a good outcome. This is kind of the process. Obviously, in crypto, it's last year was kind of a record year for M&A, but still a a nascent tool. If you look at also deal values compared to the traditional space or even the fintech space, where we're kind of at 1/5 or so in deal value and compared to fintech. So still an early topic, and there's a lot of education that we also like to do with founders whoever consider that route.
Interesting. I find 1/5 of fintech still quite substantial, but it's clear. So that's good news, but it's clear what your process is. And it's also very clear, obvious that by the very nature of these situations, yeah, people are dealing with this for the first time. So they employ someone like you who's a specialist and does it for their daily living, right? Um, so that makes a lot of sense. What is typically the compensation model for an investment banking firm?
Yeah. So the primary revenue stream is really transaction related. So largely coming from a success fee that's based on successful completion of the deal and is tied to transaction value, which on the one hand obviously is a great way and powerful alignment tool, because ultimately our success is the success of the founder, right? If we achieve a transaction at all, which is a challenge by itself, but then also the highest possible outcome, we obviously get we get rewarded higher, and this is in full alignment with the founder. So that's a great model. The flip side obviously is there's a core risk also apparent, right? So our success also depends on picking the right bets, where an M&A process one is obviously inherently complex to get done, and we talked about it. But also for us, allocating our capacity, which is limited, in 1 year or one cycle to the right bets is ultimately what shapes our success as a firm. So the process of picking the right bets, and there we set up a very kind of unique, I would say, process. We operate similar to, you can even think about it like a VC type model, where we run a deal committee before every deal that we even consider to engage with. So if a founder comes to us or we're somewhat introduced, we first basically run through a process where the sector team that covers that specific sector needs to make a case before in front of everyone else in the Areta team, and gets challenged also on the business, on the financials, on the likelihood, on the market, and really needs to kind of defend the case. So only if a deal goes through our internal committee, we engage in a deal, because that's ultimately what, all our success is tied to in picking the right bets.
Absolutely. So that would be the main way you manage risk as a firm. Are there other ways that you run risks and you try to limit them?
Yeah. So the main way is basically the sell side due diligence, where there are a couple of factors influencing that, and it also is kind of very dynamic, right? Where the market stands right now, what are themes in the market that are in demand? Where, as an example, looking at the last year, right, payments and stablecoins obviously had a great run. 3 years ago, nobody would have looked at those type of assets on the buy side, right? So the key thing here for us to mitigate the risk is being super close to the buy side and the leading corporate development teams of, the couple of buy side parties you have in crypto, because in the end, we're talking about kind of 100, maybe 150 firms that are actually um, actively kind of looking at M&A opportunities in size, right? Kind of like a deal value $50, $100 million onwards, that have the capital to do that, have the kind of strategic momentum, and are wanting to expand on their roadmap through M&A. And this is kind of our source of doing the job right? We need to understand where's the interest coming from, and being able to assess the deal likelihood before we engage. And then the second key kind of input factor there is obviously the hard numbers or financials, where the crypto space and it's been great to observe also over the last 2 years, I would say, really has moved to the revenue meta and looking at, okay, a tangible business is only a business that also repeatedly shows that it can generate revenue and is more than, an idea in the future or a forecast in the future based on a narrative. So matching this is kind of the job for us, and obviously there's also sometimes luck involved, right? Involved in that. It's a roller coaster at times as well in the team, right? Sometimes you have high conviction on a deal and it doesn't work out in the last minute, but there are also surprises where you already think, okay, we spent 1-2 months now exploring the buyer side, and then suddenly there's this new buyer coming up and the deal goes through. And so it's quite emotional. And took us also as founders really through this roller coaster in the beginning on an emotional side. And by now I think the skin gets a bit thicker, but yeah, still very, very exposed to that, obviously.
Yeah, for sure. It's one of those elements that's kind of part of the game, right? When you're in business, it's things always are unexpected. But I think with time, you, like you said, you develop a thicker skin and you become a bit more, yeah, you don't get too excited too soon, and you don't get too disappointed either too soon, right? You just like more, okay, we'll see, we'll see, we'll see. So that's
Yeah,
good.
it's
That's
a very
healthy.
interesting one. Yeah, exactly. And we see this also with the kind of new team members joining, the deal fever that you're mentioning, right? It's like it's so real, right? In the beginning, you see a new deal and you're okay, wow, okay, and then your head starts to explode and like what opportunities are and so on. And then going through a couple of these cycles, seeing how these situations can evolve, it's like okay, let's stay calm at first and then and see where
Yeah,
it goes. Like exactly.
you get seasoned. Hey, another question, real quick. What are investment banking practices that might be common and that are totally legitimate and fair, but that maybe you don't engage in because they don't fit your like strategic profile or the way you go about business, things like that?
Mhm. Yeah, I think um, from a kind of practice perspective, or what we also seen in the digital asset space, especially across services firms and on the investment bank side, I think there are, uh, a couple of really well-established players as well, and we're kind of all in the same boat, so it doesn't feel like, a competition at times. We're super close with most of them, meet them on all the right panels and so on. So it's been great to follow each other along, and typically we exchange kind of the practices also with those parties to kind of learn from each other, as we're still in such a young space. That might change over time. I don't know. In terms of what we definitely, I think, do differently or is somewhat unique is that the deal selection, we probably take on kind of uh, a small share. Don't want to quantify it, but a relatively small share of the deals that we could do or in situations that we could engage with. Where as a services firm, typically you would think, okay, think about a marketing service firm or any other advisory service firm. The goal is, okay, any mandate that we can get, let's do it. We charge fees and we, expand the team. And we could do that as well, right? We could expand the team now to double the size, take on kind of 3 times the mandates or so, and also get financially rewarded for that. But ultimately, what we found really is through the approach of picking fewer deals and really just the deals that we are 100% convinced of, we can go in also 100%, 110% out in making sure the deal is a success. And this is obviously one on the side of our asset as a firm is also the kind of reputation that we have in the space, right? And the buy side parties only look at so many situations, right? So we also want to create basically that reputation that, okay, if something comes from Areta, it's
Yep.
it's vetted by them, and when those guys send me something, it's a serious situation that I should look at. Versus if you would take on kind of 3 times the amount and we just spam people with kind of the mandates and situations, it's also a business model and likely would also work for the one or other party, but we really are in the camp of okay, doing fewer things, but do them right, and see the upside here really in also transaction volume and being close to the leading deals in the space, the big deals in the space, versus trying to do everything. And here I think might even be a bit German heritage or so, in that sense, a bit kind of trying to do the work right first, and then hopefully it speaks for itself, versus going out too bold in the beginning. Might have harmed us at the one or other situation already as well, but this is generally the culture that we have within the firm.
Very nice. Concentrated bets. And as your neighbor, as a half Dutchman, I'm very well familiar with that philosophy and approach about things. Like there is such a thing as what we call Duitse degelijkheid. It means like the German sturdiness and robustness, right? Like what they're known for, like all the typically like German industry, right? All it's like quality stuff. So okay, that's noted. You already mentioned, that this stance also developed over time for you guys. So, and you guys have been doing this for a while. So I want to dive a little bit deeper on that. So what have been more specific events in, say, the last 1 to 2 years, or just broader market developments that you noticed that have, well, not just impacted this choice, but maybe other business choices you made as well?
Yeah. So I think there are a couple of ones that come to mind, very different in categories. So let me think about how to structure them well. I think the biggest theme here is really how fast the space moves, right? And this is just incredible and still always, sometimes unbelievable if you go through year after year after year. And like 2 years back, we thought totally different themes were hot, and there's a new hype basically every 6 months. Some big shifts that I think maybe like 2-3 big shifts that impacted our business or also the strategic decision making was one, basically the now change to institutional interest, or fully kind of market pivot to institutional TradFi, fintech interest in digital assets, where a year or 2 years back, the whole focus was on early stage builder teams. All ecosystems were spinning up incubators, grant programs, accelerators to, find use cases and fund early stage builders. While now the market has shifted really to, okay, how can an ecosystem get closer to traditional institutions, get closer to the big pools of capital, get closer to, traditional firms, even if you look at the payment vertical or so. And this shift certainly also, uh, steers us a lot in where we spend our time in terms of the verticals. If you look at the M&A market holistically, probably 70-80% of deal volume is really happening in trading infrastructure and exchanges, where typically the buy side are the larger US based exchanges or other larger exchanges around the world that are very aggressive in M&A, and then either expand geographically or expand kind of vertically and building out their product roadmap. So this is the most acquisitive vertical here, and becomes more acquisitive as we speak. Secondly, kind of payments and stablecoins is one that was part of this whole market shift now, with basically on-chain payment rails and stablecoins being one of the first big use cases that emerge out of crypto that the traditional world sees and sees an immediate kind of value creation potential, and thus became board priority and part of those board discussions over the last year, which was for us also, we know it's a big theme, but the level of or the sheer pace of that development is always something that strikes us, and then obviously also our activity goes into those verticals where the deal volume shifts. And I think tokenization is, I think, the third I would manage as basically a key theme now that people in the traditional world understand as a value creation potential for asset managers around the world. So around these themes, our activity shifts a lot. Connected to that, an interesting one, which is we also have a on-chain services business as part of the Areta firm or umbrella, if you will, where historically we worked a lot with really our feet on the ground with DAOs, foundations, so even were in kind of DAO forums, writing proposals, discussing proposals with different stakeholders. So kind of as on-chain native as you can go. And was also like an evolving category back at the time. Beginning of last year, with the regulatory shift, the kind of DAO meta has totally died out, because now as DAOs were seen for a large part of the space as regulatory arbitrage, so your token wouldn't be classified as a security, people increasingly moved away from that meta because they saw the inefficiencies also of at least running those larger scale ecosystems with the DAO. So there was also a shift where we were involved with our feet on the ground, and that really 100% shifted to now engaging those teams on a leadership level directly versus engaging with DAO participants, writing public proposals, which was a very fun journey, but very messy and very chaotic. And due to the market shift, and that's coming from the regulatory side, a business unit that completely switched. So there are these market movements that as we all are, right, prone to with whatever we do, and the activity can shift quite fast, and it's always incredible to see how fast. Like I think coming also from the traditional space, it's just insane how fast a space can move year over year.
Absolutely, and it only seems to be accelerating still. Like you said, these metas and these narratives, they used to last maybe for maybe sometimes a better part of a year or like 6 months, like you said. But lately, sometimes it feels like a meta can last for 1 or 2 months, and then it's already on to the next thing. So it keeps accelerating. You mentioned earlier that you're pretty selective about the deals that you do. Um, so do you think that um, like what do you think is s- because of the deals that you do and the work that you do, what do you think is data that you see or information that you have access to that other players in the market don't? And um, based on that, what do you think a lot of people might think, but is actually or say or your opinion is actually contrary to that? So
Mm.
basically, I'm asking, what are some unique information or insights you have based on the unique information that comes across your desk, basically?
Yeah, I think across the big themes, the market is clearly moving in one direction, right? So you see basically institutional demand growing. You see a couple of key themes emerging, and talked about it already, kind of stablecoins, payments, tokenization, and so on. So this is obviously all publicly observable data. I think where we are equipped here, we are obviously part of a lot of the private conversations with the buy side teams, but then also teams on the other side that are starting to build in those verticals. So we always have a good reflection on what is kind of the hype and what is narrative driven, and typically see that the narrative picks up sometimes to an extent that is not, fed by the actual activity that we sometimes see, or at least activity is a bit earlier than what kind of the public makes out of it. So that's always an interesting view. I think where we have also unique insights, and this comes from the different business units that we're engaged with, is from the secondary markets activity. So we run a capital markets team at Areta where we support with OTC transactions, investor relations, but then also have a secondaries desk where basically we have a live view on at what prices are people willing to sell stakes in companies that they hold in private transactions that are not on the public market. So we kind of have a live data feed, if you will, of what is the perceived value of projects and companies that are out there, which one obviously educates our decision making on the M&A side, or if we support a larger size capital raise where we know, okay, this vertical publicly might stand somewhere completely different than what we see on the private side, and where people actually pulling the trigger on engaging in a transaction, which is ultimately the only, real validator of a price. And that obviously, creates a very good view on the market. And yeah, I think the general themes are, supported by that data. So the altcoin market and positions that we see there is obviously, under extreme pressure right now. And we all know kind of the input factors of that. But yeah, we kind of see have a daily view on that level of really price intel and transaction intel.
Pretty strategically smart to have those units, right, running next to each other. Basically, they really complement each other in that way. That's smart. Earlier we were talking about past events, and so far we've talked about pretty much what has, what have we seen in the last few years, what have been your experiences. Now I want to look a little bit more forward. First I want to ask you, what are events that, if they were to happen, or developments that, if they were to happen, that would like meaningfully alter the course of Areta as a firm, and that would meaningfully cause you to shift directions or pivot or anything like that. And like maybe not developments that you necessarily think will happen, but that you don't deem impossible, right?
Okay, yeah, that's an interesting one. I think the largest drivers will always be kind of one on the regulatory side. So right now, obviously, it's an interesting time in terms of stablecoin regulation, and we're all eyeing on kind of the latest developments with the Clarity Act and seeing how this unfolds, which ultimately has a direct impact then on the trajectory of digital assets firms in the stablecoin space. Similar things we see on the payment side, on the tokenization side. So whenever there's a big kind of regulatory decision made that then equips digital asset native companies on a different level, so either puts them ahead in versus the traditional space, or prioritizes traditional institutions or banks, that has a direct impact on our business. And ultimately, this basically is something that, we're trying to observe closely, but there can also be complete curveballs, right? And we've observed them in the past. And the example of this, current regulatory phase is a big example of this, right? Whereas our heads also as a firm were a lot centered around onchain, token M&A, also new token launches unfolding, and potentially seeing business activity move there, and also equipping the team in that regard, right? So, okay, maybe the big opportunity next to M&A is also, supporting token launches on some type of institutional level. Whereas right now, if you look at the market, currently it's obviously no topic anymore to engage in these type of situations where the liquidity for altcoins is not looking great. People are optimizing for builders who can show that they have a business, and typically advise people to not launch a token too early, to not get exposed to the public market too early. And these are things that fundamentally also influence us in where to move over the next year or the next quarter. So we typically do kind of quarter by quarter thinking as it moves so fast. And in the past had a lot of strategic shifts also with new activity coming up. Right now it feels like, okay, there's a really clear path right now in terms of what are the where's the activity heading, and where we will also not move from. So yeah, that's definitely the big one on the regulation side. And I think in terms of capital markets, the IPO wave is obviously a big one for us, right? So that has a huge impact with every new IPO that is happening in crypto. There is new liquidity coming into the space, equipping the parties with more capital to deploy also in M&A transactions. The space gets more institutional from a lens. The more IPOs are out there, the more kind of traditional firms are looking at the space, and also the more traditional firms will look at sell-side targets in the space. So these moves, wherever there's big, capital inflows, or as mentioned, regulatory changes, is kind of what we ultimately, follow to an extent, because it has a direct impact on M&A.
Very interesting. Okay, IPOs. Of course, it's interesting to hear from you that there's such a meaningful factor in how the space will develop. So you expect them to um, continue and to grow in size. Is that correct? And if anything, if you do, is there anything that you think could kind of stop that train?
Yeah. So if you look at basically where the IPO wave or market stands in crypto right now, it really moved from kind of a very nascent, not sure how many crypto companies can even IPO, to right now there's a wave of IPOs that are already live, but then also coming up and are planned. And these are all kind of the mega deals that are targeting kind of the 10-20 billion dollar valuations. And we've seen also those IPOs perform well in the past, which generally is a great trend for investors coming into the space and looking at the space as equity class to be able to invest in. So there we certainly expect the wave to roll out fully this year. Obviously, I mean, from a regulatory standpoint, there are always kind of curveballs that can happen. Market timing and cyclicality also plays a big role in terms of timing IPOs, where right now the crypto market as an asset class obviously is under extreme scrutiny, right? It's a bit of a detachment, I feel, from the sentiment on the institutional side. So it's not as clear on how this will affect IPOs, which is very different from the past, right? If you look at the last bear markets, I mean, last one was maybe a bit different already, but the bear markets before was like, okay, are we still here tomorrow? Nobody knows, and talent floods out and so on. This time, you see similar reactions on the really builder-centric front, right? We had a couple of big names now leave the space. and obviously not great announcements for all of us. But on the institutional side, we don't see the conversations kind of dry out to that extent. So it's a very different cycle this time. At least feels like it. So
Yep.
yeah, knocking on wood. I mean, we all hope for a good outcome also this year and see where the market is going on that front.
Yeah, definitely. Let's hope we'll have the third co-founder and then the fourth co-founder on our show next year and the year after, right? Um, but, and I agree. It's funny. 2 weeks ago, we had Sid from Maple on the show, and he was noticing the same thing. This decoupling between on one hand the valuations, right? The token valuations in the market, everything is in the dumps. But then on the other side, if you look at the news headlines, you see like big institution, TradFi institution after TradFi institution coming into the space, adopting blockchain technology, doing integrations, installing payment rails, et cetera, et cetera. So it's a weird schism that's taking place right now. So let's see how that plays out. You mentioned that at the firm you guys uh, review the strategy quarter to quarter. So, what are some things that we can look for from Areta in in the coming months? What are you guys preparing for? Um, any exciting things that are coming up that you can share with us?
Yeah, I mean the big focus for us now is doubling down basically on the verticals that we've done a fair amount of acquisitions in, which are in our heads really the key areas where we want to spend time. And so last year, for example, we sold Breakout, which is the leading prop trading firm, to Kraken, which was a great deal on the trading infra side. We sold CoinMena to Paribu, which was the largest Middle Eastern exchange, sold to the largest Turkish exchange, so an example of geographical consolidation on the exchange side. This theme and leading some of those brand mark transactions in the digital asset space and trading in front exchanges is something that we're obviously doubling down on and want to make sure we continue to cover those transactions, and hopefully you'll see us around those headlines as you scroll. Typically at the bottom of the page in the last sentence, there's the advisor mentioned. Hopefully find us there in the one or other transaction. And then, second and third is also then payments and stable coins, where we, with the team now, equipped ourselves really well, also with new hires, where we just see a lot of activity, and it's a great vertical. It's also a vertical to be active, similar to tokenization. So knocking on wood that you find a couple of the deals that we're currently working on there in the time to come. And yeah, very excited for this year. I mean, it's so interesting that the public, price sentiment, exactly as you said, is like, a depression vibes kind of. But
Yep.
in reality, looking at where the activity right now is headed, I think we've never been more excited about where the space is right now, and never been more excited also about the level of interest in the space that is actually like tangible and feels kind of grown up and taking all of us to the next level.
Yeah, it's strange to say, right? Like, but it's true. It's strange to say that it's an exciting time when at the same time you look at the charts, but it is definitely true. And actually, I've sent a call like in the past year. I have sent him a couple times, like a news item, because I came across it, and then like you said, at the bottom it says like negotiated or whatever by Areta, and I was like, hey, I saw this, good job. So
Yeah,
keep it up.
appreciate it.
It
We're
it
always
it
we're
is
always
being
super
noticed.
happy for these messages. Always, obviously, kind of other messages that make our day. So I appreciate also
Yeah,
you reaching out on those.
good work is being done and is being seen, and it's being appreciated. Um, thank you for coming on today. If people want to learn more, I believe your website is areta.io. Should they go there? Are there other places that you would like them would like to direct them at? And yeah, where can it best go?
Exactly. Yeah. Thanks for the little ad space here.
Sure, of
Website is
course.
always a great starting point. Twitter and for the more traditional folks, also LinkedIn. We post nearly daily updates on activity, and then most interestingly also reports. So if you're really interested to dive deep, not just what we do or so, but dive deep into some of the verticals, and I always find it super interesting to also what the team produces on like now these larger verticals, understanding market composition, which companies are out there on payments, tokenization, trading infra, and so on. We also publish a lot of reports that you can dig, and I always find it kind of a nice thing to read through. And then if you want to chat, we're very approachable, happy to chat and be finds the one or other person in the DM.
Wonderful. I definitely recommend people to do that. Bernard, thank you for coming on. I thought it was a very interesting conversation. I really enjoyed it. Enjoyed your insights about, the type of information that you have access to, how you run those two divisions alongside each other with those synergies, where you think the market is heading, and the weird split that the market sentiment, but then also the innovations are in. It's been a wonderful conversation. Thank you for coming on.
Totally, yeah. Had a blast. Thanks a lot for having me, Stefano. Keep up the good work. Also, really enjoy what you guys are doing, and I think it's super important also to get the message out to more people and cover those type of topics. So thanks a lot for having me.
Thank you. I really appreciate that. Enjoyed having you on. To our audience, we hope you enjoyed it as well. This was Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. See you on the next Market Cap.